Hello viewers, welcome to my channel. I am Hashim Ali Khan. Already 5 problems I have completed so far on computing the income from salary. Now I am in the 6th problem. So hope my regular viewers are watching each and every video. Be acquainted with all the problems, how to compute the income from salary, what are the provisions. Every problem we are coming across new points. So focus on those new points. Always keep a notebook beside you while watching this video and note down the points, important points. Whenever I say something new, immediately you write it down. Like that, if you follow, definitely you will get a good grip on the subject of income tax. Otherwise, the provisions are huge. So many provisions are there. You cannot be able to remember all. Now, 6th problem. Before starting 6th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Take a screenshot of the complete solution of 6th problem, then I'll explain all the points in detail. Come on, see the 6th one. Sri Vinod Sanghi is a citizen of India. His age is 42 years, working in a corporate sector, Gandhinagar city, Gujarat state. He never went out of India at any time. He's a resident, ordinary resident person. Determine his income from salary for the assessment year 21-22. So we are not concerned with all the story of this Mr. Vinod Sanghi. We have to find out what is the income from salary for the current assessment year 21-22. Now, monthly emoluments. First of all, you see the format here. Computation of income from salary for the assessment year 21-22 salary. First, monthly emoluments. So, basic salary 31,500 per month. So, 31,500 into 12, 3,78,000 is the salary. High cost of living allowance. High cost of living allowance is nothing but dearness allowance. Dearness allowance is also called as high cost of living allowance. It is fully taxable. So here I have taken high cost of living allowance. How much is given? 15,000 per month. So 15,000 into 12, 1,80,000. Next item, CCA, city compensatory allowance, always fully taxable. CCA 2,800 into 12, 33,600. Next one is helper allowance. Regarding helper allowance, income tax provision is unspent amount is taxable. When the employer is giving helper allowance to the employee, the spent amount should be deducted. How much amount he has received? 2,400 he has received the allowance. But how much actual expenditure? 1,450. So 2,400 minus 1,450. Whatever amount you get, that is unspent, into 12, because it is monthly emoluments. This is monthly. So you can see here, helper allowance. 2,400 allowance is received, out of which 1,450 are spent. So deduct 1,450, 950 is the unspent amount. So 950 into 12, 11,400. Unspent amount is taxable for helper allowance. Next, transport allowance 1,900, 75% is spent. Regarding transport allowance, Income Tax Act provision says, if the assessee is a normal person, then transport allowance is fully taxable. Ignore the amount spent. Amount spent should not be considered. Whatever transport allowance received, fully taxable for a normal person. The assessee is a normal person. So here, transport allowance 1,900 rupees per month into 12. You will get to 22,800. Ignore that 75% is spent. Next, entertainment allowance, EA. How much EA? 1,800 per month. So here, entertainment allowance EA 1,800 per month into 12, 21,600. Remember, EA deduction under section 16(2) is not allowed because the assessee is a non-government employee. So here you can see I have given in working note EA deduction. EA received is fully taxable and no deduction is allowed under section 16(2) as the assessee is a non-government employee. In this way, you have to maintain the notes. In examination also, you have to present all these notes. Then only you can fetch good marks in examination. Otherwise, roughly if you simply calculate without showing working notes, you will not get the good marks. Next, entertainment allowance, then pet animal dog maintenance allowance 2000, amount spent 1600. Pet animal dog maintenance allowance is given by the employer to the employee. Income Tax Act says fully taxable. Pet animal allowance is fully taxable. Amount spent should be ignored, not at all considered. So here, pet animal dog maintenance allowance 2000 per month into 12, 24,000. Ignore the unspent amount, that I will write it in the working notes. Then interim relief. Interim relief IR 5,000 per month for 4 months. Interim relief received from the employer is fully taxable under the head salary. Under the head salary, interim relief 5,000 per month into 4 months, 20,000. Now next page, yearly emoluments. So far we have seen monthly emoluments. Now we are coming to the yearly emoluments. Yearly. Bonus 55,000. Bonus is fully taxable under the head salary. So under the head salary, take bonus 55,000. Then incentive for achieving targets, just like commission. Commission is also one of the incentive. So incentive for achieving target is nothing but the commission. It is taxable under the head salary. So incentive 80,000. Next, indirect monetary benefits paid by the employer. Benefits paid by the employer means it's a perquisite. When indirect monetary benefits given by the employer to the employee are nothing but perquisites. So contribution to RPF 14%. According to the provisions of Income Tax Act, employer's contribution to RPF is exempted up to 12% of salary. When the employer contributes to RPF, up to 12% is exempted. Over 12% is taxable. Here 14%. Employer has contributed 14%. So 2% excess. That 2% is taxable. So here employer's contribution to RPF in excess of 12% of salary. So 2% of 3,78,000, 7,560. Remember, you have to take the respective items under the respective head. Don't take here and there all the items. You must remember what are the items that may appear under salary, what are the items that may appear under allowances, under perquisites, like that. Then life insurance premium 19,000. See here, life insurance premium paid by the employer. Employee has taken a life insurance policy, but the premium is paid by the employer. It is a fully taxable perquisite for all employees. Fully taxable perquisite for all employees. So here life insurance premium of employee paid by the employer 19,000 directly. Then ESI insurance premium 5,000. Life insurance premium paid by the employer is a perquisite, but ESI insurance premium is not a perquisite. It is the expenditure of the employer. So this should not be considered under the income from salary. Next, obligations of the employee paid by the employer. Again, it's a perquisite. Any monetary obligation of the employee met by the employer is a perquisite. Gas, electricity bill in the name of employee but paid by the employer. When gas, electricity bill, all these things are in the name of the employee but amount is paid by the employer, it's a taxable perquisite for all the employees. For everybody it is taxable. So here gas, electricity bill in the name of employee paid by the employer 18,820. Next, profession tax. Actually, profession tax is the obligation of the employee, but here professional tax is paid by the employer. The profession tax of the employee is paid by the employer. So again, it's a perquisite. Professional tax of employee paid by the employer 5,100. Telephone and cell phone bills in the name of employee rupees 6,000. Specifically, Income Tax Act has given any telephone bill or cell phone bill of the residence of the employee paid by the employer is a tax-free perquisite. Already we came across this point in the earlier previous problems also. It's a tax-free. In working note you should write on. Working note you should write on. Telephone bill or a cell phone bill of the residence of the employee paid by the employer is a tax-free perquisite. So all the points, whatever points are given in the problem, I have explained each and every point. Now, formally I'll show you. Salary. Basic salary we have taken, bonus, incentive for achieving target, employer's contribution to RPF in excess of 12% of salary, then interim relief. These are the items that should be taken under the salary. Now, allowances, high cost of living allowance, CCA, always fully taxable. High cost of living allowance is nothing but DA, fully taxable. Then helper allowance. Helper allowance, Income Tax Act says unspent amount should be taxable. Unspent amount should be taxable. So how much allowance he received? 2,400 monthly he received, and monthly he spent 1,450. So unspent amount is 950 into 12, 11,400. Transport allowance, Income Tax Act says fully taxable. Amount spent should be ignored. Then EA, entertainment allowance, fully taxable right now. Pet animal dog maintenance allowance, fully taxable. Amount spent should be ignored. That's all. These are the allowances. Perquisites, life insurance premium of the employee paid by the employer is a fully taxable perquisite. Gas, electricity bill in the name of the employee but amount paid by the employer, fully taxable perquisite. Profession tax should be paid by the employee but it is paid by the employer. It's a perquisite taxable. Then take the total. Profit in lieu of salary is not there. Gross income from salary 8,76,880. From this deduction, standard deduction is least of the following two. Gross income from salary or 50,000, whichever is less. So gross income from salary 8,76,880 or 50,000, whichever is less. So 50,000. EA reduction will not be allowed because the SSC is a non-government employee. In working note, you have to write on that. Profession tax paid. Already in his name, profession tax is already paid 5,100. So first of all, this is paid by employer. That's why it is taken under perquisite. Lastly, Income Tax Act says who is paying, we are not bothered. If profession tax is paid in your name, you will get the deduction. So profession tax paid 5,100. Total is 55,100. Deduct income from salary 8,21,780. Computation of part completed. Each and every point I have explained. Hope you have taken a note of all the points which I have explained. Now in working notes, transport allowance. Just now I told you transport allowance received by a normal person is fully taxable. Amount spent should be ignored. Secondly, EA. EA received is fully taxable. But EA deduction under section 16(2) is not allowed because the SSC is a non-government employee. Next one is pet animal dog maintenance allowance, fully taxable, no actual expenditure incurred, ignore. Interim relief is taxable under that salary. Contribution to RPF up to 12% exempted, excess will be taxable. Life insurance premium paid by the employer is fully taxable perquisite. Gas, electricity bill in the name of the employee paid by the employer is fully taxable. Profession tax of the employee paid by the employer is a taxable perquisite. But later on deduction will be given under section 16(3). Then telephone and cell phone bills in the name of the employee paid by the employer is a tax-free perquisite. Last one, standard deduction is least of the following two. Actual in gross income from salary or 50,000. Whichever is less. The standard deduction allowed is 50,000. That's all. Completely I have explained 6 problems on computation of income from salary. Inshallah, the next problem will continue in the next video.